Friday, January 20th, 2023, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at how the emperor is not happy with Zimbabwe for challenging its monetary supremacy. Before I do that, I'd like to thank all of you again for your interest in the channel, for your support, and for those of you who are new to my videos, make sure you subscribe to the channel. Make sure you like the videos as well. It helps. Before we go on to Zimbabwe, just want to go over some recent news that I've seen that I think are interesting. I'm going to put the link to them below in the description to the articles. I'll just go through them very quickly here. One of them is from a couple of days ago on Reuters, and I'm going to put them all under archive.ph so you don't have to worry about not being able to read them. It says exclusive ECB union says staff losing faith in leadership over inflation pay. So even the people who work at the ECB are unhappy with Lagarde. Of course, she's a lawyer by trade and a criminal. Of course, she was sentenced to a year in prison. She didn't have to serve it, and she went back to become the managing director of the IMF, which is something we're going to talk about later on today. The other one that I thought was interesting, it came out as well about 3 days ago. Saudi Arabia says open to settling trade in other currencies. So here we have a Saudi government official in Davos saying that they're fine settling in any currency, really, not just the dollar. He was very diplomatic, I would say. So I'm going to put that below in the description. That's another challenge to the emperor, I would say. And then this one here, this is from Zero Hedge. And this is a little older, but it just talks about, it's from January 11th, how Saudi Arabia looks to invest in mining assets to secure critical minerals. And they talk specifically about lithium and nickel because of the electric energy, electric vehicles, but also other commodities. And it just goes to show that the move to commodities is here to stay. I thought those stories were interesting. The other thing that's going on is Davos, of course, and there's a lot of arrogant people there. I've seen Al Gore and John Kerry.
And when you stop and think about it, it's pretty extraordinary that we, select group of human beings,
right, because
of whatever touched us at some point in our lives, are able to sit in a room and come together and actually talk about saving the planet. I mean, it's so almost extraterrestrial to think about
almost false
saving the planet. And if you said that to most people,
I mean,
they think you're just a crazy tree-hugging, lefty, liberal, do-gooder, whatever.
Yes, right. Yep, that's right.
And there's no relationship. But really, that's where we are.
Get flustered and saying people have to do this and this, and hopefully they're getting exposed for what they are. They're like busybodies who think they know best. They don't think you and I can live an independent, sovereign life. And hats off to Rebel News. They accosted the CEO of Pfizer. That was a great clip. Try to find that. It's everywhere on the internet. I'm not going to put it here, but anyway, back to the emperor. And why do I say emperor? And by emperor, of course, I mean the United States. And I have to thank one of the viewers who sent me this book here. It's called Pugnare. So you can see here, it's the economic success and failure. It's about the Roman Empire. It's a book written about economics during the Roman era. And it's very interesting because I was reading it and I always thought Augustus became emperor, but he didn't. And on page 39, it's talking about that, the fact that he doesn't want to be seen as emperor. He wants to be given the power. So it says here, then in 23 BC, Augustus accepted from the Senate and people of Rome the power associated with an ancient position, but he declined the title. He removed himself from the competition for position and display and allowed that to continue without disruption to the public order. Some centuries earlier, the position of plebeian tribune had been created, a position with no executive power. Now the Senate and people of Rome enacted a law which gave the powers of a tribune to Augustus for life. The right to veto, the right to present legislation without the title. He held those powers for 37 years. Others continued to compete for and be elected to the ancient positions, enjoyed the ancient dignities and privileges that came with the positions, but he could overrule any of them. In the alteration of the balance of power, the Senate willingly participated in a new creation, a head of state in place for life. It was to be clear, however, that the Senate, the council of the respected elders, and the people had consented to this change in the balance of power, or at least everyone maintained the appearance that this consent was necessary. So there you go. Augustus was tribune for life, and that wasn't really generally a very high position, but it gave him the veto power for life, and the veto power is everything, and that's where we come to the IMF and Zimbabwe. A lot of you know that Zimbabwe has come out with gold coins, circulating gold coins, to help its replenish its reserves, because basically the US dollar is the official currency there now, because they've been really bad at managing their own currency, as we know, the hyperinflation. But with the dollar being really strong in the last few years, maybe not now, but they had a shortage of dollars, so they thought that bringing gold into the monetary system would help. And this story here came out, let's see, when was this? January 16th. And it's from BNN Bloomberg. I think it's a Canadian version of Bloomberg. It says Zimbabwe's gold coins sell above 2,000 each for the first time. So let's go through this. It's not a long article. Zimbabwe's gold coins introduced in July are selling above 2,000 for the first time. The so-called Mozi Owa gold coin, named after Victoria Falls, a key tourism site which straddles the border between Zimbabwe and Zambia, were priced at 2002 spot $51 for a 1 ounce coin on Monday, according to data on the Reserve Bank of Zimbabwe's website. Spot gold was at 1914.21 an ounce at 2:45 p.m. in London, so a bit of a premium there in Zimbabwe. And it says the central bank introduced the gold coins to halt a collapse of the Zimbabwean dollar and help ease demand for US dollars. Smaller units were brought into circulation in November. That's interesting. Ease demand for US dollars. So that means another country that is trying to move away from the US dollar. We've seen that in Ghana. They are basically buying, I think, 20% of gold produced by the miners in Ghana with their own currency. So they can use the gold to buy things from other countries like oil and valuable things, because, as we know, gold is money. But the interesting comment here came right at the end, and it seems really not very important, but I think it's very, very important, and that's why I'm making this video. It says the International Monetary Fund urged authorities last month to wind down the use of the gold coins and to use appropriate interest-bearing instruments to carry out monetary policy. So they don't think gold is appropriate, but the dollar is appropriate. And notice how they want Zimbabwe to stay in debt. They want an appropriate interest-bearing instrument, i.e. U.S. Treasuries and dollars. And I spoke yesterday about that there is a parallel monetary system in the UK, and it's called the Gold Sovereign or the Britannia. And they don't want you to know. And it's the same thing for nations. The United States doesn't want nations to start using gold because they know it's a threat to the I owe you nothings dollar. So why did I bring this up? And the emperor, I called the U.S. an emperor. Well, the U.S. is not an emperor. It's supposed to bring democracy to the world, right? The IMF, for example, which urged authorities in Zimbabwe to stop this. IMF is supposed to be part of the UN system, and the countries there are supposed to have voting rights, right? But if you look at the rules that the US put into place at the Bretton Woods conference, and one of the rules for voting in the IMF is that you need an 85% majority for major decisions in the IMF. So if there's a country that has more than 15% voting rights, that country, much like Augustus, can veto anything has been doing it since 1944. And would you be surprised if I told you the USA has 17% of the votes? So effectively, the USA is like Augustus back during the Roman times in terms of the IMF. It has the veto power. It's just one of the members of the IMF, right? And they're doing it democratically through voting. But luckily for the US, they've got 17% of the votes. So anything important that has to go through the IMF, the United States Treasury, the US government can veto. So it will be interesting to see what happens to Zimbabwe, the situation there with their gold coin and the IMF and the United States. It's another challenge to the dollar. And all the other stories we looked at, they're challenges to the dollar as well, especially the Saudi Arabian official at Davos saying that they're ready to deal in any currency. And I think they're very comfortable in saying that. Maybe 10, 15 years ago, he wouldn't have said that because they've signed deals, of course, a couple of years ago with Russia for a military cooperation, security cooperation. We saw in December that not just Saudi Arabia, but the other countries in the Gulf Cooperation Council, they've made a deal with the Chinese. So, yeah, the threat to the dollar is there and it's going to continue. And people need to wake up to that because that will mean less demand for dollars, less demand for the currencies that are derivatives of the dollar, the ones in the dollar index, and that will mean higher prices, more currency debasement. The less people demand dollars, euros, pounds, or yen, the less valuable they become, just like a stock. If people don't buy Apple stock, they keep selling it, the price of that stock is going to go down, and it's the same thing for currencies. So let's look at where the markets are then this morning. It's just gone past 8 a.m. London, and we're going to do the questions as well. The last 4 questions from last week after the market update, if you want to stay on to listen to those. So we've got spot gold at 1933.75. Yes, gold is going up a wall of worry, I would say, a controlled move higher. And that's fairly positive. I think we could go technically in the short term. We could go up to 1950 and maybe from there see a little bit of a correction down Yeah, this is just for those of you who want to trade. For those of you who stack gold and silver, I think basically any time is a good time if you're able to accumulate enough of the fiat paper to do so. So yeah, the high overnight has been 35 and the low 23. Silver is above 24 right now. It's up about 20 cents at 24.03. High's been 06. Low has been 23.75. Dow futures is up 82. NASDAQ 100 futures up 56. S&P is up 12 points. So stock market a little stronger. To the currencies, sterling is down about an eighth, 123.72. The euro is up about an eighth, 108.50. The dollar is up a quarter versus the yen, 128.77. Dollar's down slightly versus the yuan at 6.77. The dollar's down about just under 1% at 68 versus the ruble. Let's look at the Aussie dollar. Aussie dollar is up 0.5%, 69.50. The dollar's down about 0.2 versus the Canadian at 134.44. And the Kiwi dollar is up 0.5%, 64.31. The commodities now, general commodities, platinum is up $6 at around 1,042. WTI crude is up 1% at 81.50. Brent is up 1% as well at 87.06. High grade copper up 1% at 428. Quickly look at the U.S. Treasuries here. The 10-year yield is up 1 basis point at 341. The Japanese bond market has kind of calmed down for now. There hasn't been a challenge to that 0.5% yield in the 10-year. We're trading around 0.4. So we're going to look at the last 4 questions from last week, seeing that it's Friday today. So let's check them. So it's questions 11 to 14. And this is from the video, The Party is Over for UK House Prices Part 3. This is from Interstitial. Any idea where to buy collectible coins? Gold investments offer limited supplies, not collectible. Yes, I do. My good friend Peter Morris at Bromley North train station in southeast London. I've been dealing with him for years, and he's got all the collectible coins you'd want. Yeah, Peter Morris coins and medals, and you can check it online, and you can get his phone number. You might want to call him before going there because he doesn't have regular hours, so I highly recommend Peter Morris. Question 12 from Mike Goodman. How long should we let the ratio go before we start moving from silver to gold? I've always thought 50 to 1, but that might not be realistic. I understand that the physical ratio in the earth to be around 15 to 1. I recognize the industrial nature of silver over gold. I understand gold to be king's money, silver to be the people's money, or a gentleman's money as well. Well, I kind of look at gold and silver as money, as you said. So I would think more of exchanging silver for something other than gold. I try to keep them both. But if you are looking to get out of silver into gold, I would say 30 to 1 would be a level that I would consider. 50, I think, is still undervalued for silver. And why 30? Well, because that's where we went near to back in 2011 when silver went to 50 and gold went up to 1900. And some people argue that the ratio in the earth is more like 7 to 1. So 15 to 1 has been the historical level at which bimetallism has been set, like the U.S. Coinage Act of 1792 set at around 15. So there you go. This is from Brantley Miller. What do you think about long-dated call options for precious metals? What brokers would you trust? I would stay away from those. The brokers are not the problem. The problem are the market makers, the bullion banks who trade these options. They will make sure that your option, your long dated option is worthless by the time it comes for they will make sure that your long dated calls will become worthless by the time we approach expiry. And I've tried trading long dated calls out of the money in gold and silver. I would stay out of that. I would spend the money stacking. I would not play their game. Number 14, this is the last question from last week. And of course, these are not all the questions. We try to keep it to about 15. So we'll do our best to get as many as possible. What is a good way to invest in oil? Thank you, Shiska22. Well, you could buy NYMEX futures, which are traded on the CME, COMEX, NYMEX, crude oil futures, but I wouldn't recommend that. Best way is to look at the oil companies, and there are different oil companies as well. There are the big oil companies like Exxon and Chevron and BP. They call them integrated. They're involved in all the steps to exploring, drilling, and selling the oil. And there are other ones as well which do different things in the oil industry. You might want to check that. That's the best way to do it, I would say. So there you go. With that, I wish you all a great weekend. Take care. Bye.